But let's also cut across to Sanjiv Singh, Chairman of Indian Oil, addressing the press
for the
conference.
quarter ending 30th June was 21.351 MMT as compared to 21.437 in the corresponding quarter of the last year. Domestic sales for the quarter ending 30th June has increased to 20.736 million metric tons as against 20.415 in the corresponding quarter of financial year 16-17, thus registering a growth of 1.6%. The gross refinery margin of the corporation for the quarter ending 30th June 17 was $4.32 per barrel as compared to $9.98 per barrel in the corresponding quarter of the financial year 16-17. This GRM includes the impact of inventory loss. The finance cost for the quarter ending 30th June 17 was 718 crore as compared to 680 crore in the corresponding quarter of financial year 16-17. Company has registered a profit of 4,549 crores during current quarter of the financial year as compared to the profit of 8,269 crore in corresponding quarter of previous financial year. Both these figures have inventory gain and inventory loss built into them. The variation is majority on account of inventory losses during the present quarter. The current under recovery of superior SKO, PDS and LPG domestic is 69.32 rupees per cylinder for LPG and 6.57 rupees per liter in case of PDS kerosene. I would also like to share a couple of other highlights with you all. Indian Oil continues to be the top-ranked Indian company in the Fortune 500 global listing release for the year 2017 with the rank of 168, with a sales turnover of 438,710 for the year and a profit of 19,106 for the last year. In our continuous endeavor to diversify our crude supply sources, Indian Oil recently procured a VLCC cargo of US crude for the first time after the export ban on US crude was lifted in December 16. This is a high sulfur crude oil on DES basis for delivery at Paradip Refinery during September last week to October first week. The above cargo is likely to be loaded from the US Gulf Coast during the month of August. This has definitely opened the new sources for Indian Oil as far as the crudes are concerned. The nationwide rollout of daily pricing has been implemented with effect from 16th June 2017. Daily price revisions for MS and HSD, excluding state levies cumulative for the fortnight since 16th June had been, we initially during the first fortnight after the 16th June, we saw the price fall in MS and HSD, which was about 2.81 for MS and 2.12 for HSD. And subsequently in both the fortnights after that, we had been seeing upward trends in terms of MS and HSD prices. Following the implementation of GST, the pricing structure has been modified in all GST applicable products. In fact, Indian Oil was able to roll out GST implementation very, very smoothly from the very beginning of the date. And prices for PDS kerosene and domestic LPG have increased in view of 5% GST now applicable. Effective 1st August 2017, the Dealers Commission on MS and HSD has been revised. The major part of the revision is on account of increase in wages of staff deployed at retail outlets as per the central wage structure. Other components which also include is the return on NFA, which is net fixed assets, which have been revised. The stock losses for different products have been also been revised in line with the study carried out by IIP Dehradun. And we have also taken into account the wages or the returns or the margins which specifically for the small volume dealers. In the recently held World Petroleum Congress at Istanbul, Indian Oil bagged two prestigious awards, one for Technological Award for our flagship INMEX technology, and the other one was for implementation of PMUI scheme and the Smokeless Village Initiative, which is being driven by Indian Oil. Our Smokeless Village Initiative and PMUI implementation, they bagged the Excellence Award under the category of Social Responsibility for Large Companies. So these are the various highlights which I wanted to share with you all. And now the session is absolutely open. If you want more details, you want more clarification, I think we should be able to provide.
Can you please quantify the inventory losses and gains quarter-on-quarter?
Inventory loss and gain. During the current quarter on the crude, the inventory losses were 2,033 crores.
Total.
Compared to the same quarter last year, it was a gain of 3,785 crores. On products, the current quarter the losses are 2,009 crores, 2,009, compared to inventory gains of 3,695 crores. Almost against a loss of against a gain of 7,500 crore in the last year same quarter. This year there is a loss of 4,000 crore. So it has impacted the profit by 11,500 crore in, if you actually see.
11,500.
Because 7,500 was the gain, this year is 4,000 is the loss. So the delta is 11,500 actually.
How should we interpret 10 points in the balance sheet? Items that will not be reclassified into profit or loss.
Items?
That will not be reclassified to profit or loss. There is a negative of 3,061 crores, and in the corresponding quarter of the last financial year there was a positive of 337 crores. So ONGC, the OCI item that we have classified.
Other.
ONGC oil.
That is the difference in the valuation, market valuation of the investments which we hold in ONGC, Oil India, GAIL. So it's basically a diminution in the value of the investments. That is as per the new accounting standard Ind AS. So this is the requirement. So this has to be reflected now.